So Iran and the United States still talking, trying to get a diplomatic solution on Iran's nuclear program. Meanwhile, oil prices are higher today. There still is the chance of U.S. military attacks on Iran. We're joined by Helima Croft, Head of Global Commodity Strategy at RBC Capital Markets. Helima, thank you very much indeed for joining us. Give us the latest. I mean, what is your base case? Is there likely to be a strike on Iran?
Launch sequence for another U.S. military strike on Iran. Yes, there were negotiations yesterday. There were some positive sound bites about meeting again next week, but the basic divide over whether Iran can enrich uranium domestically or not has not been resolved. And just this morning, we've had reports that the U.S. Embassy in Israel is moving to an evacuation of non-emergency staff. We have similar reports that there is a U.S. Embassy drawdown in Baghdad. They did similar things in the run-up to the U.S.-Israeli airstrikes on Iran in June. So all signs at this moment point to another military confrontation.
The past attacks have not disrupted oil flows out of Iran, broadly speaking.
That is potentially why the White House is confident that they can contain the fallout from another military engagement. What I will say is I returned from a trip to the Middle East earlier this month, and there is broad concern amongst our key Gulf allies that a second military confrontation will not look like the first, and that Iran is more incentivized presently to attack regional energy facilities, attack tankers in the Straits of Hormuz, to essentially impose cost on Washington for engaging in such action. And I would say the fact that the United States overthrew the leader of Venezuela, Nicolas Maduro, also sparks fears amongst the Iranian leadership that anything we do will be ultimately a regime change exercise. And the Iranian leadership, I think, is trying very much to stay in power. And so they will push back hard against what they see as a second U.S. regime change exercise this year.
Would they potentially attack Saudi facilities, or whose oil industry would they launch missiles against?
Concerned about the Strait of Hormuz. They've already done military exercises in the Straits. We have seen in 2019 that one of the first things they did after the U.S. reimposed sanctions on Iran was to attack tankers off the coast of Fujairah, the UAE. And so I do think, even though they probably cannot close the Straits of Hormuz, that all-important critical waterway for the transport of oil and products, that they could absolutely mine the Straits. They could attack individual tankers. So I would look to the Straits. And then again, I think we should be thinking about, UAE's oil infrastructure, Iraqi oil infrastructure. Again, I think that they have the ability, because of their missile capabilities, their short-range missile stockpiles are largely intact. And so those could be deployed against energy assets across the region.
You've been tracking the big OPEC plus producers who have implemented voluntary cuts, and comparing how much oil they're supplying to the market versus now or recently versus pre-COVID or April 2020. So, for example, Russia is still supplying quite a bit less, or did in January, than it did back then, and the same with the Saudis. So they could, if they wanted, put more oil on the market.
We look at the April 20 production levels as essentially almost potentially near-term peak levels, because April 2020 is when you had a very fierce price war between OPEC and Russia. And so we don't think those producers held a lot back. And some countries have made some capacity expansion since April 2020, like UAE. But we think basically, except for Saudi, every producer is in the market right now. Russia has been suffering significant infrastructure attacks, lack of investment. We do not think Russia has the ability to surge. We think the only country that has the ability to surge is Saudi Arabia. And the amount of production they could bring on would not be sufficient to offset a major attack on an energy facility or a major disruption of transport through the Strait of Hormuz. So one of the challenges for the Trump administration is they were very focused on getting more OPEC barrels on the market the first year in office. But the problem is, if you bring forward that production, you don't have that much left in reserve in the event of a supply disruption. And also, think back to the Russian invasion of Ukraine. Part of the reason why we didn't have a massive supply disruption or run up in prices was the fact that the United States decided to release 1 million barrels a day for an extended period from the Strategic Petroleum Reserve. We have not rebuilt our SPR. So again, the shock absorbers in terms of spare barrels, everyone's been focused on a well-supplied oil market. But if you have a physical supply disruption, then you focus on what barrels can you bring on very, very quickly to fill the gap. And that's where we have a shortage if we do indeed go to another round of military engagement and it is more disruptive when it comes to regional oil supplies.
Oh, that's interesting. So the valve can't be turned up that much in the short term. That's very interesting.
Right. U.S. production is not a light switch. Whenever you have a supply disruption, that's the phone call is made from Washington to Riyadh. And again, they've already brought forward barrels. There just isn't a massive shock absorber if we were to get to a serious military conflict in the Middle East.
Helima, thank you very much indeed. Helima Croft is head of global commodity strategy at RBC Capital Markets. Really appreciate it.